Good morning. Good morning. What's going on, everybody? What's going on? Shout out to y'all. Shout out to y'all. If you're just joining, make sure y'all hit that like button. Subscribe if you're brand new. Oh, what's up, Daryl? What's up, Scott? Good morning. Good morning. Appreciate y'all joining. Today is Saturday, March 29th, 2025. This is pretty much the last weekend or the last week of trading for the month of March. And we're about to go into April next week. So April will begin on Tuesday. That will begin the second quarter. What's up, Lord of Lords? Shout out to you. Shout out to you. Shout out to you. If y'all just joining, make sure y'all hit that like button. I appreciate y'all time. As you can see, we got some bleeding in the market. We got some bleeding going on in the market. I'm going to review it. There's some great opportunities out there as well. So are y'all taking advantage? Are y'all taking advantage? Definitely appreciate y'all joining. What's up, Mike? Shout out to you. Shout out to you. Get a few more minutes to let a few people come in the live stream. Like I was saying, this is the last week of March. And we will go into Sunday and Monday, which I don't really count those days, but we're going to roll over. If you look at the charts, March has an extra week. So this is going to be like the 5th week of trading on the weekly time frame, but on the monthly time frame, March ends here in 2 days. So I'm not really going to count the first week of April as a trading week. And I'm going to show y'all that here in a minute. Good morning to y'all. Shout out to y'all. Make sure y'all hit that like button. Subscribe if you're brand new. If you're interested in signing up to my Patreon, I'm over here. I feel like I'm doing a good deed. If you want to start from a beginner level, come to the Patreon, subscribe to the Patreon. And I have a series of videos and lectures that can get you started if you're brand new. So if you decide to do that, make sure you have a Discord as well, because the content is in the Discord. So sign up if you're interested in that. Let's go ahead and look at the economic calendar. What's up, Lenny? Appreciate y'all joining. Let's go ahead and look at the economic calendar. So today is March 29th. It is Saturday, 2025. It is currently, let me see, what time is it? It is 11:51 Eastern Standard Time, 11:51 Eastern Standard Time. So if you haven't seen the market bleeding, are y'all panicking? Are y'all nervous? Was y'all expecting this? If you've been listening to my live stream, what have I been saying? Y'all could tell me in the comments. What have I been saying for at least a month? I've been talking about it for a month. But this is the economic calendar. As you can see, this was the week of trading, so it's pretty much complete. Yeah, Lenny, we was expecting this. So what I'm gonna do now is let's look out to next week. So tomorrow we'll begin the new week. But as you can see over here on the left side of my screen, let me zoom in on it. This is the calendar. All right, that's as far as I can zoom in on it. But if you look over here, this will go into the last week of March. March ends on Monday, and then we will roll over on Tuesday. Tuesday will begin the second quarter of 2025. Second quarter of 2025, so Q2. And this is what I've been expecting. So we on that 3-month time frame on any chart that you're looking at, we're about to come to a quarterly close. So first quarter is about to end. It's been a drag, and I'm gonna review it here in a minute. And then we're going to go into next week. Let me go ahead and highlight that. We got a lot of high impact news next week. So expect a lot of volatility, probably more selling off going into next week. So I'm going to be anticipating this. And if you're going to be trying to day trade, definitely lower your expectations because of all the high impact news. So Monday, we have no news. That's because it's the last day of the month. And then soon as we enter April 1st, which it starts Q2, we got a whole lot of high impact news in the market. One of the high impact news that really impacts the market is non-farm payroll, which stands for not for professionals. Us as professionals, we don't like to be in the market on these days. And I got a protocol that I am out the market. If I'm day trading, I'm out the market pretty much after Wednesday, the morning session on Wednesday. After Wednesday, I go ahead and let them have Thursday and Friday. Remember, I'm saying this because next week, Thursday and Friday, you can expect pretty much a lot of volatility and choppiness in the market. So definitely be expecting that. Definitely be expecting that. Lenny, you said, I'm looking at just adding some more long-term assets if the prices are discounting. Yeah, I'm about to go over that, Lenny. I'm definitely about to go over that. It's still some great opportunities, but let's go ahead and forecast out into the, I'm not going to count this week as the first week of April. What I'm going to do is I'm going to go out to the following week, which is 2 weeks from now. In April 6th, this is going to be, to me, the first week of April. April 6th through the 13th, through the 20th, through the 27th. So I'm going to count this week right here. And as you can see, on the 6th through the 12th, we got a lot of high impact news, but not early in the week, Monday and Tuesday. And then on Wednesday, Thursday, Friday, we got a week full of high impact news. So we can pretty much forecast that there will be market volatility in the market. So I'm gonna stop right there. Let's go ahead and look at the crypto matrix. This is my crypto matrix. Let me blow it up on the screen. This is my crypto matrix. So right now we got XRP down to $2.10. Have I not been expecting this? Have I not been calling this? Y'all tell me. Y'all tell me. XRP at $2.10. XLM 26 cents. XDC down to 6 cents. HBAR 16 cents. Bitcoin 82,000. Ethereum 1,800. Algorand 18 cents. Solana $128. And there's more assets as well, but these are the ones that I pretty much follow and I pretty much keep up with. Now let's come over to XRP. Start off on XRP. And again, this is the 3-month time frame. So it's been a long quarter, man. It's been a long first quarter 2025 after coming off a strong fourth quarter in 2024. So we had a strong fourth quarter in 2024, and we have 2 days left, 2 days and 9 hours, and this candle will finalize. It will complete. And that's what I've been anticipating pretty much all quarter. We started off January real strong. January, we traded higher and we took out the all-time high. We did that in January. Y'all remember that? But hasn't time changed since then? There's a lot of things far as technical analysis is concerned. A lot of things have changed since January. We went higher, took out the buy side liquidity, which was the all-time high. Smart money offloaded their long positions. And that's why you see this large wick in the market right here on the current candle. After taking out their long positions, they have been shorting the market back down to discount and pretty much consolidated February and most of March. The entire February, entire March. And then here we are late March. The market is retracing back down. And what have I been outlining? Y'all tell me in the comments. What have I been forecasting? I've been talking about this for over a month. At least a month I've been talking about this. What have I been outlining in the charts? If you've been following my content, if you've been listening to my technical analysis for one entire month ahead of time, what have I been forecasting? Shout out to you, Daryl, the big busy, the big buy side imbalance, sell side inefficiency. So it looks like, well, it's going to be in the market, but it looks like we're going to want to come down and fill some of that inefficiency in. So let me go ahead and highlight that fair value gap. If you're new to my channel, the markets are algorithmic. Shout out to you, DeAndre. Shout out to you. The markets are algorithmic, and I know this ahead of time. I've been talking about this 1 month in advance because I see it. I watch the markets every day. I'm on it like white on rice. That's when I'm looking at the markets, I'm on it like white on rice. I don't know if you ever heard that before. That's like a Southern term. But I'm gonna highlight the fair value gap right there. Let me get it with a different color. I'm gonna highlight it orange. And then I'm gonna label it 3-month FVG/BISI, which stands for buy side imbalance, sell side inefficiency. So what you do is you look at the fair, you see this large candle. All it did was offer buy side delivery. It didn't offer any selling inside of this candle. So once this candle closes here in 2 days, and I'm not expecting nothing today and tomorrow. So as far as like, I'm not expecting much going into next week right now. And you already know, I just showed you the economic calendar. We got a lot of high impact news. But once this candle closes, this gap will become valid. This gap will become valid. You have to wait for the candle to close for a fair value gap to become valid. And that goes for any time frame. So what I'm going to do is I'm going to drop my Fibonacci from the high of the fair value gap down to the low of the fair value gap. These are the quadrants or the price ranges. If once this candle closes and the new candle opens, I want to see where this new candle opens. Once it opens, there's this large void in price where the market didn't trade efficiently. It didn't offer any selling. So I'm going to look for it to offer sell side delivery down into this gap. And remember, this is a 3-month time frame. So how long can we hang out inside of this gap? Now, this is going to disappoint a lot of people in crypto, especially XRP holders. Because of this time frame is such a long-term time frame, we can hang down here for 3 months. I already told my private communities that, hey, this summer, go touch grass. Make sure you have things planned out for this summer. Make sure you have family functions, family trips, spend time with family, go do activities, be outdoors. Don't be caught up in the news. Or another thing you could do is continue to hustle and continue to grind. Like if you're working a job, make sure you're taking overtime. You know, you got options. Whatever mindset you decide to take upon, make sure you stick to that. But do not get caught up in the noise that's going to happen. This is an institutional reference point. This is an area in price where institutions are going to want to offer themselves a buying opportunity. If you're a part of retail or if you're new to XRP or crypto, let's say you just came in around December and you was buying all in this price range right here. Let me highlight it. You was buying between $2 and let's say $2.80, all up in this range right here. Well, guess what? You're new to crypto. And if you was buying in this range, you was buying at a premium. You only want to buy the market at a discount. So you've been buying in a premium. How many people in the live stream, in the comments, in the chat have been buying at random price levels? Let's say you've been buying above $2.10. Let's say you bought at $2.90. Let's say you bought around $3.25. Could y'all admit that y'all was buying in that price range? How many of y'all was chasing price? How many of y'all was chasing price? I want to know in the chat. Or have you been in XRP and you've been buying at a discount? Who's going to be honest? It's okay to be honest. It's okay. What you're going to have to do is you're going to have to endure a long time at a discount. You say you only added under $2, Lenny? Well, that's good for you. That's a good thing. But again, we're going to be coming back down under $2. And you can see the price levels that I have highlighted inside the gap. We got the top of the fair value gap. That's roughly around $1.79, $1.78 price range. We got $1.50, which is the upper quadrant. This is what this trend line right here. It's the upper quadrant. It's the 0.75 level. That's the upper quadrant. That price is $1.50. We got the midway point of the gap. That is called fair value. That is the equilibrium, which is the midway point of the gap. That's the 0.5 level, which represents the midway point, the 50% level. That's $1.22. If we drop below that, we got the lower quadrant, which is the 0.25 level. That's 94 cents. Now, I'm already going to tell you, I don't want to see us come down and drop below that. Meaning, I don't want to see any candle closes. We can drop down and go below it, but I want to see that candle come back up higher and close. I don't want to drop below the 50% level and start closing. That's going to be very bearish. It's going to be very bearish. Now, we could come down here and offer these opportunities, but I want to see the price snap back up and come back up out of that. So let's say we drop down to the 0.25 level, which is the lower quadrant. That is the 94 cent level. And then at the bottom of the gap, this is going to scare a lot of people. And I don't want to see this my damn self. If at the bottom of the gap, that's a price level of 66 cents. Now, why is this a fair value gap? Well, from an algorithmic perspective, using algorithmic terms, the market didn't offer any selling in here. So the algorithm is going to want to refer back to this range in price. The algorithm is going to want to refer back to this range in price to make it efficient, because it did not trade efficiently. They're going to want to drop it back down to make it efficient. And that's just what algorithms do. Let me find another example. And then you want to know what's crazy? During the long haul, or during the tough days of crypto or XRP back in the day, like there was this gap right here in 2017, right here. I'm going to highlight this BISI right there. Look how long it took years. Now, I'm not going to say this one is going to take years because we're in a different market environment. We're getting near regulations. We're getting near banks want to utilize these assets. But during the dog days of crypto back in 2017, all the way up until now, I'm highlighting these fair value gaps. And look at this gap right here. This formed in April 2017, so years ago. See how the market dropped down? It did not hang out inside of this fair value gap. It dropped down, offered one opportunity down at this was in 2020. I'm assuming when the lawsuit happened, January 2020. This candle right here, it dropped down, offered one opportunity at 11 cents. Imagine grabbing XRP at 11 cents. It dropped down one time, offered it, and then it never returned to that level again. And then it traded back up into this BISI right here, this buy side imbalance, sell side inefficiency. And we have been ranging inside of it for years, from 2020, really from 2017 all the way up until 2024. That's how long we was inside of this gap. And every time it drops inside of that gap, it offered you a buying opportunity. DeAndre, you said you think they're going to hit that sell side hard and start the month off. That's what I think as well, DeAndre. So there's different things that can happen. So for example, when the market dropped down to this gap right here, let me re-highlight it. My bad. When the market dropped down to this gap right here, it did it one time. So that's a possibility that we can do that on this gap right here. We can drop down there, tag it one good time, and then take off. That would be very bullish if it does that. But I'm having a feeling it's not going to want to do that. It's going to want to retrace and hang inside of this gap for several months. Remember, this is a 3-month time frame. So each one of these candles takes 90 days, roughly 90 days. And we can hang out inside of this gap for 90 days. And that's why I said in the next 3 months, we are currently in April. Well, we're going into April, May, June. That's 3 months. That's 1 quarter. That's essentially the second quarter of 2025. April, May, June. And then once we get to June, August, September, October. No, wait a minute. April, May, June, July, August, September. April, May, June, July, August, September. That's the third quarter. After September, October, November, December. That's the fourth quarter of 2025. So again, we can hang down here all the way into the fourth quarter. That's going to really suck. But we take it one day at a time. We take it 1 week at a time. We take it 1 month at a time. That's technical analysis. That's how you analyze the market. And remember, this is the long term. So for you long-term investors, this fits your personality. That's why I promote day trading and showing you day trading opportunities, because some of us want frequency. Some of us want to make money right now. So waiting this long period of time, it's going to be taxing and enduring on your psychology if you don't know what's going on in the market. So hopefully y'all understand what I'm talking about. Let me get a quick roll call. I got 20 people in the live chat, in the live stream. Shout out where you're from, city, state, region, country. Happy Saturday. I'm not going to be long. I want y'all to enjoy y'all Saturday. And we're pretty much doing an analysis on what's going on in the market, because I know a lot of people are probably complaining because the market is selling off. Shout out to Chicago in the building. Shout out to Florida in the building. Shout out to you, Excalibur. Shout out to you, Big Dre. Delaware in the building. Shout out to Delaware. Make sure y'all hit that like button, subscribe if y'all brand new. This is pretty much an end of the week analysis. Shout out to Augusta, Georgia. Shout out to LA, California. Daryl, what part of LA, man? I know it's probably traffic out the world out there. Shout out to BR, Baton Rouge. You in my own backyard. Shout out to you, Mudvayne. Shout out to Lord of the Lords. East Oakland. Shout out to you, Danny. Shout out to Canada. Danny, you said you're going to get buy orders ready at these levels as a long term. So yeah, so if you're a long term investor and you really don't have time, like you don't have time to be in and out the market like day trading. And when the market drops down to this gap, you already know how the exchanges operate. If you don't know, well, exchanges can freeze up and not allow you to get in the market if you're trying to place market orders. So what you want to do is you want to be ahead of the exchanges from freezing, and you can set limit orders, but they don't have to honor your limit orders. So for example, what I would be doing is, if I'm a long-term investor and I got some capital on the sideline, and this is what I've been telling y'all, who remember me telling y'all, start stacking fiat, start saving money right now for these opportunities that are coming. I've been telling y'all this for over a month, and I also been highlighting this same gap. If you go back to my live streams on my channel, the entire month of March and the end of February, I was saying, I want to see how we trade in March because I see a large fair value gap forming. It's been over a month that I've been saying this. So it looks like we're going to get it. And let's say you want to start setting limit orders. You want to go ahead into your exchanges and set limit orders that are inside of this gap right here. So for example, I would set one, and this is for any asset. So you can apply this same information to whatever asset that you're wanting to get in. I like to analyze XRP. I like to use this as the standard. I don't want to be all over the place, but I like to go into detail with XRP because that's a large community and I'm actually helping people out. So what you want to do is you want to set a limit order at the top of the gap. Boom, just like that. You want to use the price levels that I have outlined. Let me show you my Fibonacci settings. These are the current settings that I have on my Fibonacci. If y'all want to use the fib to lay it down on the gap, I use the 0, the 1, the 0.5, the 0.25, and the 0.75. I have all those highlighted. And you can use these levels and it will give you the same price levels that I'm showing you in this gap. And what you want to do is you want to set a limit order at $1.79. That's the top of the gap. You want to set a limit order at the upper quadrant, which is the 0.75 level. That's $1.50. You want to set another limit order at the midway point, $1.22. And let me tell you how to do it. You want to set the bulk of your limit orders at the top of the gap. That's a guaranteed fill. If we come down to this fair value gap, you got a guaranteed fill at $1.79. So whatever capital you're willing to deploy, you want to set most of it at the top of the gap. Your next set, your second wave of limit orders, which is lesser than your first limit order, you want to set it at the 0.75. And then if we want to go a little bit deeper, you set the last tier of your limit orders at the 0.50, because you don't want to wait. You don't know if it's going to go all the way down to, let's say, the 0.25 level, which is the lower quadrant. You don't want to set the majority of your limit orders down here, because it does not have to go down there. They might just want to drop it down at the top of the gap right there, or they might just want to drop it to the 0.75 or the 0.50 and never come down to this region inside of the gap. So that's good advice. That's not financial advice. I'm just saying that's good technical advice on how I do it. That's how I set my limit orders. I'll set the majority at the top. That's a guaranteed fill. If you ever want to get in the market, set it at the top of the gap. Guaranteed fill. The next fill would be 0.75, and then the midway point. That would be my last fill for the gap. So Excalibur, he said H-bar has a similar fair value gap. Yeah, I'm gonna go over it, Excalibur. Majority of them do. Lenny, I set limit orders on multiple exchanges. I don't want to get boxed out. No, well, you're gonna do what you want to do, Lenny. There's really no point in going to all these exchanges, but that's your strategy. I can't tell you what to do. Again, once this market drops down and tags your orders, I mean, you're gonna get filled. There's no reason to be all over the place, to be honest. But you're gonna do what you want to do. I'm not gonna stop nobody from doing what they decide to do, or not. I'm not gonna tell them any different. So this is a macro perspective. Make sure y'all hit that like button for me. Subscribe if you're brand new to the channel, and subscribe to the Patreon if you're interested in learning this skill set. For those that are in the Patreon, have y'all been going through the videos? If so, let me know in the comments what y'all think about the videos. So from the 3-month time frame, remember we got 3 days left, and this candle will close, and then we will open up the new quarter. And again, we're going to start 3 months, 90 days of price action, and we're most likely going to go lower. Okay, I got you. That's your reason for setting multiple orders, because the exchange is going down. I understand that. I understand where you're coming from now. Let's go down to the monthly time frame. So from the 3-month down to the monthly. Again, market profile is still, we're still in a buy program, y'all. Don't get it twisted. We're still bullish. Nothing has changed. We went from consolidation to an expansion profile, market condition. So from consolidation to expansion, we're not consolidating. We're consolidating on lower time frames, but on the 3-month time frame, we're in a buy program. And when we're in the buy program, you can anticipate that gaps will form. And here we are. And again, I'm ahead of all this. So here in a week or two, you're going to see the influencers on YouTube and social media, X and all that. They're going to be holding their faces. They're going to be complaining. And y'all know how they do. But again, I've been talking about this a month in advance. So go share the video. Tell them about it. Let's go down to the monthly time frame. First of all, let me go back right quick. Let's go back out to the 3-month. So at one point in this quarterly candle, this candle was green. Like it was a green candle, for example. It was this right here. This candle at one point was looking like that right there. This candle in this first quarter was looking like this right here. You see what I'm highlighting? That candle was like this. So it did a lot of damage by going up, taking out the buy side. And then what it did was it retraced all the way back down, just like this. You see that? It went all the way back down. And then look, boom, just like that. Y'all see that? Now the candle, it's like damn near we didn't do nothing for the first quarter of 2025. So there was a lot of traders in the market, a lot of people leverage trading, and they was all taking leverage and trying to go long. But the algorithm and the market makers came back and got their money back. They really hurt them. And when they sold the market back down, that's what the market did. It was taking out those leverage traders. Boom, just like that. And here in 2 days, I would not be surprised if this candle turns black, for example. I would not be surprised if that candle goes like that, where it is a bearish candle now. I would not be surprised. That's just me personally. How do we close this candle will be very important. But I just wanted to highlight that for y'all to show you that's what it looks like. Now let's drop down to the monthly. Now this candle on the monthly time frame, you can see it was black, but the entire month of March, this candle, the current candle that I'm showing, this candle was green. The entire month, it was green the entire month. But now what it did was go up, retrace back down. Manipulation, market manipulation. And then now it is turned bearish. That candle is bearish. And I want to see how we close this candle. And we got 2 days left to close this monthly candle. Also, y'all tell me in the comments, what do y'all notice about this candle? What hasn't it done so far? What hasn't this candle done so far? Y'all tell me in the comments, in the chat. Yep, it's definitely ranging. Shout out to you, Lenny, for paying attention. Inside range. It's an inside range candle, meaning it's just stuck inside of the previous month's candle. Like, it did not go up and take out last month's high, nor did it come down and take out last month's low. So what it's doing is it's just ranging inside this high and this low. It's consolidating. It's consolidating. So that's exactly what it's doing. And that's what you see in the market. And that is pure market manipulation. That is algorithmic trading. The markets are not random. That is by control. That's by design. So this is the monthly time frame. So we already dropped down to the monthly fair value gaps. We dropped down to this one right here. This is a monthly BISI. And then right here is a large monthly BISI. But I'm not going to even pay attention to this large monthly fair value gap because remember, on that 3-month time frame, we got that quarterly fair value gap that's forming. But let me go ahead and show you the 3-month fair value gaps. And that's what they look like. So again, this candle, the current candle, we dropped back down the discount. To me, that's not it. Even though this is a discounted opportunity, I'm going to be focused on that higher time frame fair value gap because the higher time frames always have more influence over price than the lower time frames. Take that in your notes. Remember that. The higher time frames always have more influence over the lower time frames. And that's pretty much what this candle is setting up for, to drop down into the orange highlighted area, which is the 3-month fair value gap that has not formed yet. We got 2 days left. So let me hide those monthly fair value gaps. And that still is a great opportunity, but I want more of a discounted opportunity. XRP dropping back down to $2.10. I want more opportunity by dropping down to these levels that I have highlighted. And you can see market maker buy program over here on the left. So let's go down to the weekly. Go down to the weekly. Weekly time frame. You can see the clear expansion. Let me hide those monthly fair value gaps. Over on the left side of the chart, you can see past price action, market maker buy program. That's a buy program. After taking out the all-time high, which is right here, that's the all-time high. They offloaded the long positions, and now we going into consolidation program to do what? Market maker sell program down to discount. Markets repeat. These things repeat over and over again. They're not random. So for the entire month of March and pretty much the entire month of February, we have been in a consolidation. Right there. That's a consolidation. We just been sideways consolidating. And you can see that the market is trying to reach for liquidity left down at discount below the market. The market is trying to reach for liquidity below the market. So earlier in the week, this pretty much all week, this candle has been consolidating right here. And we was trapped inside of the weekly range. And this is the last week of the month. What's up, Sneaky? Appreciate you joining. If y'all just joining, make sure y'all hit that like button, subscribe, sign up for the Patreon. This candle right here, selling off. We took out last week's low. You see that? Sell side liquidity. It's also reaching for all of these liquidity pools below the market. You see this low right here? That's that weekly ghost pool that I've been referring to. Well, that's inside that weekly ghost pool. And you can see we're currently still inside that weekly ghost pool. At the same time, this low right here of this wick, that is the 3-month wick low. So let me go back out to the 3-month time frame. That low that I just showed you on the weekly, that's this low right here. And once this candle completes, that low will confirm the top of this fair value gap on the 3-month time frame. So that weekly ghost pool, the low of that wick is the top of the fair value gap on the 3-month time frame that I'm highlighting. So let's go back down to the weekly. On the weekly, again, this candle wick low, once this month close, that will be the top of the fair value gap. And you can see below that low, there's sell side liquidity at that low. And if there's sell side liquidity at that low, you know the market is going to want to seek liquidity below the market and come back down, drive price to this liquidity and drive it deeper into this 3-month fair value gap. It's going to want to drive price down to this 3-month fair value gap. So I'm already knowing this. So this is the weekly time frame. We got 1 day left and this candle will close. We got 2 days left in the quarter and in the month of March. And we have been ranging for several weeks inside of this ghost pool. Now we can drop below this ghost pool, take out liquidity from the previous weeks. And that's what we've been doing. And look at the midway point of the wick right here, the ghost pool, the midway point, that's the 0.5 level. And you can see we just dropped down there today and we tapped that. And now we're just ranging around it. And we're waiting for sponsorship, which means liquidity being injected into the market. Now let's drop down to the daily time frame. Let's go down to the daily. If we just focus on the current candle, the daily candle, you can see order flow is getting bearish. It's getting bearish. It's reaching for liquidity. Below the market, there's sell side liquidity right here. And also we got this order block that we came down to. But it's definitely looking like it's going to want to go ahead, just kind of like what DeAndre said. DeAndre said we're most likely going to attack. As soon as this quarter ends, as soon as the month ends, we're going to drop lower. And remember the economic calendar. Look at the economic calendar next week. All of this high impact news in the market. All of this high impact news, non-farm payroll, PMI, and Jerome Powell speaks next week. And you already know Donald Trump is most likely going to speak sometime. So there's a lot going on next week. So keep your, have your fiat ready to go. If you're going to be long-term investing, have that fiat ready to go. So let's drop down to the hourly time frame. So everything below the daily time frame is intraday price action. So let's drop down to the hourly. You can see the sell side delivery. Price is low resistance. It's in a hurry to get somewhere. Let me throw up my weekly dividers. Right there. Let's highlight the previous week's lows and highs. You can see inside of these two vertical trend lines right here, the market sold off. What did we attack? We attacked the last week's low, sell side liquidity. So I'm going to remove that. Now we got the low from 2 weeks ago, resting below the market right here. Remember, price action in the algorithm always wants to seek liquidity. It's always reaching for liquidity. So again, let me go ahead and set up my chart for next week. I'm going to take this trend line right here. I'm going to clone it and I'm going to drag it out to next Sunday, 12 o'clock midnight. Boom, right there. So in between this window in time, that's forecasting. That's forecasting for the upcoming week. And this is XRP. And you know the market is seeking liquidity. This low right here is a low, a price level of, that says $1.90. Let me get more accurate. Yes, this low right here, that's $1.90. So I'm already knowing, okay, the market is going to want to seek $1.90. Do you want to pull the trigger yet as an investor? No. If I was trading, I'm going to be shorting the market down to sell side. Okay. Let's look back. Remember, I got data in my chart. So look at all these vertical trend lines in my charts. Let's count how many weeks it goes back. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I got 11 weeks of data in my charts, 11 weeks of old data that I constantly refer to, 11 weeks of old price data. Look at all the liquidity that I have resting above the market. I don't remove this from my charts. I leave it in my charts for weeks and weeks at a time, because you better believe the market is going to want to refer to these levels at some time in the future. The market is going to want to return to these levels at some time in the future. So I don't remove these price levels in my chart. I'm always knowing where the market is going to want to go ahead of time. That's how I know a month in advance that we're going to sell off and come lower. So, hey, take it or leave it. So again, that's $1.90. And then look, this low right here, and this low was from, let's see, 1, 2, 3, 4, 5, 6, 7, 8 weeks ago. This low is that weekly ghost pool. Remember that large wick on that weekly time frame? 8 weeks ago, I never touched this. This has been in my chart, and y'all been watching me live streaming every day. Every day that I go over crypto and do my analysis on XRP, I highlight these things and I don't remove them. All I do is I apply them to my chart, and then I come up and save my chart. And throughout the weeks, throughout the months, these levels are still in my chart. So 8 weeks ago, that weekly low, that wick, which is the ghost pool, there goes the sell side liquidity right there from 8 weeks ago. And that low right there, once we close the month, this low will be the low on the 3-month time frame on the top of the fair value gap, which means this will be the top of that 3-month fair value gap right here. There's sell side liquidity, and we already know the market is going to want to seek liquidity. Maybe if I remove that 3-month fair value gap, let me remove it. Boom, just like that. There it is. Let me remove the right there. So there goes that low in my chart. If you just simply wanted to just refer to the liquidity, that's all you need to do. I mean, fair value gaps are important, but each PD array has its own specifics. So if I just want to look at liquidity and I want to remove these weekly dividers, that's what it would look like, just like that. And this is getting more naked trading, but I'm also aware of where those higher time frame reference points are, those higher time frame PD arrays. So I know that, okay, we're inside of a weekly ghost pool, and I know also that there is a 3-month fair value gap that's forming, and the monthly. I know that we're inside of a monthly. Boom, right there. Those are the monthly fair value gaps. So do you think it's random that the market trades down to the top of that monthly fair value gap right there? Trades down to it and then rejects it. It just bounces off of it like it's bulletproof. Do you think that's random? Now, that doesn't mean it's going to go higher, but that was a target. So let's say you wanted to short the market. Let's say you wanted to get short on the market and you needed a exit. Well, there goes the exit right there, the top of the gap. So I got different strategies, different techniques. I got dozens of strategies that I can be applying. Boom, target, out the market. If you were shorting. But now you always want to stick to that higher time frame narrative. We know that the market is most likely want to go lower because there's a large gap in price below the market. So that's XRP. That's like a macro. I'm not going to be long today. That's a macro. So hopefully y'all press 1 if y'all understand the macro, meaning not macro in like when I'm showing you the certain times of the day, but macro meaning long-term perspective. Y'all press 1. Let me know if y'all understand that. Are y'all ready for it? Y'all tell me in the comments. Are y'all prepared for it? Like I said, a lot of people are not going to be able to handle it. A lot of people are going to be ready to just give up. A lot of people are going to sell out of these assets because they're tired, because of the manipulation. But to me, yes, it's manipulated, but the markets are algorithmic. So knowing that the markets are algorithmic, I can always be ahead of it. I know I'm calm. Again, who else is talking to y'all like this? Who is always, every time I go live, staying calm, not pushing fear, not pushing FOMO. I'm giving you a calm, realistic perspective. A calm, realistic perspective. So definitely, if y'all just joining, make sure y'all hit that like button, subscribe, sign up to the Patreon, support. But that's XRP. I outlined it for y'all. If y'all missed it, if y'all need to go back and refer to it, just come back to the live stream, replay the live stream. I'm gonna move on. Let's go ahead and do a quick review on the other assets. So what I want to do is let's go ahead and pull up Bitcoin. I'm gonna pull up. Let's go ahead and pull up XLM. Let's go ahead and pull up XDC. Let's go ahead and pull up HBAR. And maybe let's pull up, I'm gonna stop right there for now. Oh, I'm definitely gonna take advantage in HBAR. As soon as I get off this live stream, I'm definitely taking advantage. I'm not even gonna hesitate. I'm seeing exactly what I wanted to see, and we're coming down. HBAR, great opportunity. Matter of fact, a lot of these assets are coming for y'all for a great opportunity. Me personally, I've been in XRP for so long that I don't care if it drops back down to like $1.70, $1.50. I'm good. I'm going to be looking to these other assets like a XLM, a XDC, a HBAR. And I only have a handful. I don't get into all the, I don't have dozens of assets. I got a handful and I'm content with that. I got my positions. I'm content. When I want to go make cash, I go into the traditional markets and I cash flow. I day trade, I scalp. So I got different strategies for different markets. If I want to save money, I go buy silver, I go buy gold. So we all over the place. We don't just cover crypto. We trying to follow the money and move like smart money. Let me read these comments. Okay. Let me go ahead and start off with HBAR then, since we already right here. This is the monthly time frame. Let me go out to the 3-month time frame. Again, here in 2 days, this candle will close. Once this candle closes, we will look for a 3-month BISI. I'm not going to highlight it right here, but just know, look at this fair value gap. There's a 3-month BISI that will form. Let's see how we close. Also, we got that monthly fair value gap. So let me go ahead and do it for completion's sake. Let me show y'all. I'm going to highlight the low up to the high. That's the 3-month BISI that will be forming. And if we go any lower, there's a monthly fair value gap inside of that. There will be a monthly fair value gap inside of that. And if you wanted to, there's a lot of things going on. We still had this 3-month fair value gap as well. So let me go ahead and highlight that. This is a 3-month fair value gap. It's actually it's not an inversion, but look at this 3-month fair value gap right there. Pay attention to that. This goes back to 2021. And then we got this one right here, which is an inversion that we're currently trading in. So there's many things. Let's see if it wants to drop back down, or let's see how this candle closes, because they might want to refer back down to this gap right here, back down to 13 cents and etc. But let's see how we close. Let me go down to the monthly. Okay, 3-month fair value gap. Let me hide this one. And then we got these monthly fair value gaps. So yeah, there's the monthly fair value gap right here, and they might want to come back down to the top of this 3-month fair value gap. And that's a price range of about 13 cents. Great opportunities coming. Hopefully y'all been stacking that fiat. And the institutions want these prices. The institutions don't necessarily care about retail like that. This is great opportunities for y'all. I mean, for the institutions. They don't really care about y'all. These markets are ruthless. They don't care about your feelings. There's no feelings, no love involved. Let's look at XLM. XLM, it's just been ranging for several months. This is a monthly time frame. Let me go out to the 3-month. XLM currently trading at 26 cents. Same thing. Let's see how we close this candle. Once this candle closes, there will be a gap in price right here. Let me zoom out right quick, see if I can see any inversion. So for example, we got this fair value gap right here. This is an inversion gap. They might want to refer back down to that. I don't want to see that, but they might want to come back down to that. And then let's watch how we close this candle. So I need a little bit more information. We got 2 trading days left. Everything applies. And then we got this large gap over here. Let me highlight that. Right there, large gap. So this is an old inversion, real gap, because there's no bodies nor wicks touching. So that's a real gap in price. And the top of that gap is 20 cents. So they might want to refer back down to this long-term 3-month fair value gap in the market. So a lot of things going on. That would be another great opportunity. If y'all getting them income tax, y'all getting them large checks, make sure y'all be getting ready, saving that cash. I've been telling y'all, save cash, save cash. Make sure y'all hit that like button for me. Let's look at XDC. XDC, we had a volatile first quarter for XDC. It went up all the way up to 15 cents, and now it's back down to 6 cents. Again, same with XDC. Let's see how we close this 3-month time frame. Once we close, there will be a large, semi-large, not really huge, but a nice size gap in the market on the 3-month time frame. You want to highlight that. That's a BISI, buy side imbalance, sell side inefficiency. Once that forms, we'll be looking for the market to drop down into that gap. And a lot of people love XDC. And if you're going to be interested in it, from the high down to the low, there goes those price levels. 6 cents, 5 cents, 4 cents, and the bottom of the gap is 3 cents. So definitely be on the lookout for that. Let's look at Bitcoin. Bitcoin. I know Bitcoin Max is hating it right now, but again, if you've been watching my live stream, I was highlighting Bitcoin before it broke 100K. I was doing live streams based around Bitcoin breaking 100K way back in November 2024. It's all on my channel. You can go back and watch it. We broke that, took out the 100K level. That's a psychological level. And then ever since then, just ranging and consolidating in and out above and below that 100K level. And then I highlighted this large gap in the market on the monthly time frame. This is a monthly fair value gap. Y'all witnessed me, especially the people that have been early to my channel. Y'all witnessed this early on. And now we drop down, come down to discount, and it's just ranging in discount. You already know the average person can't afford Bitcoin. So this is more so a institutional buy for them at 85,000. And that's Bitcoin. And other than that, man, I'm not gonna hold y'all too long this evening. I'm trying to get out, enjoy my Saturday. I know y'all should be trying to do so. Definitely appreciate y'all time. Make sure y'all hit that like button, subscribe to the channel. If you want to come over here and sign up to my Patreon, I'm teaching technical analysis. I got beginner lessons. So come over here and check this out, subscribe. And I'm going to most likely go live tomorrow. I'm most likely going to go live tomorrow. But in the meantime, be on the lookout. Y'all stay vigilant, be stacking cash, and I will get back with y'all tomorrow. Shout out to y'all. Peace out. Thank you.